Hey traders, this is Blake Morrow with Forex Analytics, and you're listening to the week ahead video for May 7th, 2023. I hope you all are having a great, wonderful weekend. Summer's coming. It's probably warming up in your part of the world. Unless you're on the other side of the world, it might be getting a little cooler. Anyway, I hope you're having a great weekend. We have a lot to talk about this week. I've got to say that even though mostly it's inflation data, we still have the Bank of England meeting next week. There's a lot of things to discuss. So I'm going to get to it, but I just want to say if you haven't tried out Forex Analytics, go ahead and do so. It's $1 for 10 days. Try it out. Download the mobile app when you're doing it. Jump in our chat rooms. This way you can take advantage of all these great tools that we have inside the Forex Analytics application. All right, I'm going to actually go into some live charts, but really, I'm going to start off with, and I'm going to get to the dollar here in just a second. I'm going to talk about some currencies. I want to take a look at gold. Gold had a really big week this last week, but we're really challenging some key levels. I also want to look at the S&P and some of the other indices as well and what we're doing. We're going to start with the cable, and the reason why is because I don't know if you guys caught this, but the cable is at the 127% extension of the range. Okay. Now you notice right here you had a false breakdown, and you get a false breakdown and a reversal and a breakout. Well, that happened. You hear me say that a lot. False breakdowns lead to a breakout, or false breakouts lead to a breakdown. Right now we got that false breakdown. You can see it's led to a breakout, right? And question is where we're going to go. And here's the thing. I have to say this. A lot of people don't believe in the Bank of England. And if you live in the UK, your thoughts are probably Andrew Bailey. He is, you just fill in the blanks there. The fact of the matter is, if you do live in the UK, because a couple of our I say family members, they are our family members. Our team members also live in the UK as well. You know that food inflation remains high. Inflation remains very sticky. And so how's the Bank of England going to fight that? They're going to have to fight it with higher rates. So the Bank of England is meeting this week, and they are expected to raise rates by 0.25% or 25 basis points. Now, we closed at the highs of the week. That's something that you have to pay attention to. We closed at the highest level. If I wanted to buy the sterling, and I'm like, well, I'm just going to wait for a dip. There ain't a dip coming. There hasn't been a dip coming. I could have waited all week, and if I didn't take advantage of this little dip to the breakout point, I missed it that one day. And if you're short and you're like, no, there's no way it can sustain 125, and that was your opinion all week last week, well, it's not giving you a chance to get out either. So the problem is the cable is holding up well. And if you get a surprise hawkish Bank of England, we could very easily be trading up at this 128.65 level. And that's something that I think you all have to pay attention to if you are trading the cable. Now, I would be bearish, or I'd feel really bearish about the sterling if we broke back below 124.50. That would get me bearish. But as of right now, we have to respect the fact that it is breaking higher. I know a lot of people have looked at this longer term. They've talked to me and said, "Hey Blake, is that an inverted head and shoulder pattern?" Yeah, it is. Remember, this low happened in Asia. Our good friend Mark Chandler, my good friend Mark Chandler from Bannockburn, he very quick to reference that, and that kept us bullish through here. The fact of the matter is the cable it's got a bullish breakout. So however you feel about the Bank of England, don't let that taint the price action of what you're seeing here. Okay, that's key point number one. Also, the UK has GDP data released Thursday, late Thursday, which will be Friday morning. So just if you live in the UK or you're trading the sterling, just keep that in mind as we go into the end of next week. Now, there's a lot of inflation data coming out throughout the world. Actually, we have U.S. inflation data. We have New Zealand inflation expectations, which I'm going to talk about. Let's pull up the Kiwi here. Let's talk about that for a second. We also have Mexico. Their inflation data comes in on Tuesday morning. You have China inflation data Wednesday night or Thursday morning if you live in China. Norway, Wednesday morning, local times. That means it's going to be really, really late Tuesday for those of us in North America. We also have Brazil, India, as well that have inflation data. So just some things to think about. Okay, let's talk about the Kiwi. Now the Kiwi, and I'm going to clear this all. You can see I haven't looked at the Kiwi dollar for quite some time with you all, so we're going to take a good look at it right now. One of the things about the Kiwi, if you remember from a couple weeks ago, well, for those of you that listen to our daily shows, we had a 618 retracement, rejection, big rejection, long wick. We came down. We didn't make a lower low. You can see not making a lower low, right? So the question is, are we going to be able to retest this, 618 retracement that looks like it's coming up? That probably has a lot to do with the New Zealand inflation expectations. And what you'll notice is the New Zealand dollar is actually outpacing the Aussie for the most part. So as the Aussie bounces, the Kiwi, is not bouncing as much, or Kiwi, is bouncing a little bit more. And, going to the Aussie, look, that bear flag didn't break down. We didn't hit new lows. We're still rejecting the 38% retracement. So as the Kiwi makes it up to the 618, the Aussie, I think we're going to be lucky if we make it up here to the 38% retracement. Now, remember, the Aussie and the Kiwi tend to move in tandem to a certain extent. I mean, you'll have one outpace the other, like the Kiwi is outpacing the Aussie right now. Of course, that's the case right now. And by the way, you don't need to see my face. I just realized that I've had my face up there the whole time. But you'll notice that the Kiwi dollar has really been outpacing to the upside the Aussie. Now, as the Aussie appreciates towards that 38% retracement, that Kiwi is probably going to be, nearing that 618 retracement. So both currencies are going to have some key resistance, and really the data that we need to be paying attention to is New Zealand inflation expectations, because inflation is what's going to really, I think it's going to influence not only the U.S. central bank, the FOMC, but the RBNZ, the Banxico, central banks overall. You could talk about, and let's go to the dollar because we're going to talk about the CPI data. Central banks have gotten to a point where monetary policy is restrictive in their eyes, pretty much to where they need to stop. Like the Fed, we just came off the FOMC, and from what we gather, the Fed is probably going to pause. Now the debate is the Fed going to start cutting rates, or are they going to resume raising rates? Now I know a lot of you are like, well, they just raised rates, 5% in such a short period of time. How can they raise rates a little bit more? The answer to that question is go look at the RBA. If you go look at the RBA, they stopped, they raised, they paused, they said, shoot, we got to raise rates again unexpectedly. You think the Fed's capable of doing that based on what they just did? Absolutely. Absolutely they are. So how do you take advantage of interest rate moves? Because, interest rates are what move currencies. Well, my suggestion is you go to the trader funding program and take advantage of it with our money. Now, let me just mention something really quick, because some of the rules have changed in the trader funding program. When you want to try to access our capital, you can make 75% of the returns or up to 90% of the returns on new assessments. We just changed those rules where you have the ability to choose 75% of what you make or 90% of what you make. You get to take home for new assessments. Also, if you don't think that you can pass an assessment, I passed one in 6 weeks with my wife having an emergency surgery and during the Thanksgiving and Christmas holidays here in the US this last year. If you want to know how I passed an assessment, go down below. There's a link down below in this video, and it's a video of me passing an assessment and what I did to pass an assessment. Also, if you think the rules are too hard or they're too difficult, well, they've just been relaxed. So check out the new rules to trading. Go to the F.A.Q. page and then take a look at the rules here. So once you go through the accounts, you go, oh, what are the rules? Well, now you have a 5% daily loss limit, because if you lose more than 5% in one day, then you're taking on way too much risk. Definitely way too much risk to trade our capital. But you have a 6% trailing drawdown, and then all you have to do is make 10%. Trailing drawdown, 6%. We've laxed those rules. So, and that's for all new accounts starting now. So anyway, check out the trader funding program. But like I said, the way you take advantage of interest rate decisions and interest rate moves is, in this market environment, and why risk your own money when you can risk ours in the trader funding program. So anyway, let's talk about the dollar and why this inflation data that's coming out this week is so important. Now, we have CPI on Wednesday. You notice the dollar. One of the issues that we had, and we drew this last week, right? We had, I believe we drew that last week of that trend line. There was a breach of this ascending trend line. Then we got slammed right back down. You see, this is really critical support. The market is expecting that inflation continues to cool here in the U.S. Well, what if it doesn't? Well, if it doesn't, you're going to see the dollar break out to the upside, right? That's pretty obvious. But how about if inflation continues to cool? The dollar, after creating a false upside breakout, could break down. So what are the best trades to take advantage of in either situation? Because as a trader, I don't know what's going to happen. I don't know if the inflation data is going to be stronger or weaker. All I can do is prepare for either situation. So if we get stronger data, what do you think of the best trade is? Well, if we get stronger data, that means the Fed is more than likely going to continue to raise rates, restrict monetary policy or make it tighter, and tighten financial conditions. The Aussie dollar is probably going to be the currency that has performed the weakest, not even being able to get above its 38% retracement. So the Aussie dollar would be a candidate for lower prices on stronger CPI data on Wednesday. Now, what if we have a breakout lower in the dollar? Like the dollar index breaks down because CPI or inflation continues to cool. Well, go back to the sterling, because the sterling is already trying to break out. So it already looks good. And take a look at the euro dollar. As frustrating as this is, guys, I have to point out that the euro dollar is not pulling back. And this is probably very frustrating for those of you or anybody out there who has been shorting the euro. You're not getting an opportunity to cover your shorts. You're not getting an opportunity to buy or get long if you want to. So if the CPI data comes in weaker than expected, you should see that euro take off. So those are going to be my two options on stronger or weaker data. Now, I do want to cover, before I wrap up with the FX, I want to talk about just a couple quick things with the yen. If you look at the yen, we had a big rejection of the 200-day moving average, horizontal resistance. The yen is its own animal right now. But the one thing that we are going to see in the coming weeks is we're going to see this debt ceiling debate heat up. If traders are going to be looking for safety and they're going to want to shield themselves from owning the US dollar Japanese yen should theoretically go lower if the debt ceiling debate comes down to the wire. Now, what you're also going to see is you're going to see yields fall. And if you remember last week, we talked about the 10-year yield moving lower. And if it moved lower from resistance, it would affect the dollar yen. Do you remember us talking about that last week? Well, that's exactly what happened. You'll notice that soon as the yields rolled over last week, which is in turquoise, the dollar yen slumped. So we had that, Bank of Japan position squaring going into last week, and I warned that if yields come down, dollar yen's going to come down, and that's exactly what happened from last week. Go watch the week ahead video from last week, and you can see that happening. Now, the reason why that I'm talking about the dollar yen is not because it's a great opportunity right at this moment in time, because the problem that I see with the dollar yen is we are smack dab in the middle of this range. So you're not getting a great risk reward for being in this trade right now, either direction. But look at the other yen pairs. Let's take a really quick look, and I'm going to go over to the weekly charts. And I'm going to take a look at the euro yen. That's a failure at resistance. Do you see how we did this breakout and then we failed? False breakouts lead to what? I just said it to you a little bit earlier. Breakdowns, right? So false breakouts lead to breakdowns. Is it every time? No. If it was every time, we'd be gazillionaires. But when you get a false breakout, there's a strong likelihood of a breakdown the other direction. Higher probabilities, right? That's what we do in the markets. We don't gamble. We look at probabilities. If we have probabilities stacked in our favor, the risks are tilted, towards us making money. That's when we take advantage of it. But it's not just the euro yen that we're looking at right now. Let's take a look at the pound yen. This is a weekly chart. A rejection of the highs. You could argue that was a false breakout, right? You guys see it? Weekly chart. Pound yen. Let's look at the Aussie yen. Aussie yen. We could barely even get above this 50 DMA, or it's 50 WMA, weekly moving average. But regardless, I don't know if you notice this, but we're making lower highs, right? Lower lows. I mean, that is a definition of a downtrend. Kiwi yen. Now remember, we have New Zealand inflation expectations, but a false breakout on a weekly candle, right? So we looked at the Aussie yen, sterling yen, euro yen, Kiwi yen, and then the Canadian yen. Wait a second. Is that another weekly false breakout? It is. So when you see that happen across the board, what does that tell you might happen in the driving currency, which happens to be the euro yen or the dollar yen? Well, I think there's a stronger likelihood of it moving lower than higher at this point in time. So what am I going to be doing in the next week? Well, I'll probably be selling dollar yen or other yen pairs on rallies. Now, some of you know that I am short a few of the yen pairs, but if you were in the Forex analytics community, you would know that because I'm in the chat rooms and I post the trades that I take. So therefore, you would already know that. All right. A couple other things I want to cover is, first of all, I'm going to get out of currencies really quick because I do want to take a look at what's happening in, let's go to the S&P. So if you look at the S&P, now we are past earnings, right? We're past, well, not all earnings. I think Berkshire and Hathaway, they happen to be a big company. They report earnings next week, but what you're going to notice in the S&P, let's get rid of this fib here, is that we're very buoyant. After the jobs report last on Friday, the S&P just bounced pretty aggressively, and it wasn't just the jobs report. It was obviously Apple earnings too. But what you're going to notice here is the S&P held the 38% retracement, also the 50 DMA. So what does that tell us? Well, for right now, it tells us that is support. That is what's holding up the bears from taking control. So if we get below 40.45 in the S&P, based on this, CFD. Now, if you're looking at futures or if you're looking at the cash market, it might be slightly different, but you can see the support from last week, the lows of last week. Here, let me make it simple for you. Whatever chart you're looking at, the lows of last week, if they break, it's bearish. There, right. Okay. I said it. It's easy enough to understand based on whatever charting package you're looking at. So we break last week's lows, it is bearish. The fact of the matter is the pullbacks have been very shallow, only 38% retracement. That does build a risk of a breakout to the upside. I speak with Jim Welsh from Macro Tides every Friday, and he's still hell bent on believing that the S&P will break above these highs and stop out anybody who's short and get the market. You ever play musical chairs when you were a kid? I just dated myself. Over the age of 50, I played musical chairs when I was in kindergarten. Well, or hot potato. Even though we never actually used a hot potato, but you get what I'm saying. if you get the market long above those highs and you get everybody chasing the market and then it reverses, it's kind of like musical chairs, and you just want to make sure you have a chair when the music stops. Okay. So anyway, if you look at the S&P is, really holding a 38% retracement, which is very strong support. You look at the NASDAQ, again, pullbacks are very shallow here. And why can't we hit the 50% retracement? Why can't we challenge 13,600? Look at the Dow. I mean, the Dow pullbacks are very shallow. We hit a 50 DMA and we bounced. Even the Russell 2000 bounced off of very key trendline support. I would just say that if you're watching the U.S. indices and you're looking at the U.S. markets, then, just keep in mind that they are really, for all intents and purposes, holding up, and we're past most of the major earnings. That's something to take into account. Now, one of the last things I want to point out to you is I want to point out gold, and I think gold's a really important chart, to look at. And you can see, we talked about big channel resistance all week. We've been talking about this, and then what you're going to notice with gold at the very end of the week, we reversed hard after breaching these highs. Now, it depends what data feed you're looking at, whether we hit new all-time highs or not. But the fact of the matter is we have reversed here. Now, this is where the correlation between the US dollar and gold is going to be really important this week. I know a lot of you trade currencies, and I know a lot of you trade precious metals. The most important thing for me is that you're going to be looking at probably inflation data that comes out Wednesday morning. Now, we do have producer prices, just FYI, but CPI is going to be the big one. As I mentioned, the dollar, and the dollar is in turquoise here, so just keep that in mind. Remember, we talked about the dollar index has this wedge that's setting up, right? Go back and look at the dollar index. So you can see it's a very inverse relationship. If I'm going to trade the dollar, remember, if the dollar has a bearish breakdown, what are the two trades that I'm thinking of? You can answer. Go ahead. Long sterling, pound dollar, following the Bank of England. We'll see. Euro dollar breaking out to the upside, right? If the dollar index breaks down, okay. Even the dollar yen is probably a decent trade back down towards that wedge support. But if the dollar breaks down, what do I want to see in gold? Well, I want to confirm that gold is rallying off of this channel support. But what if the dollar is to turn higher? What's the good trade out there if the dollar turns higher? Do you guys remember that? Aussie dollar. I hear dead people. So in the Aussie dollar, if the Aussie dollar breaks down, right? Or excuse me, it turns around and breaks down, and we see dollar strength, what should gold do? Gold should probably break through this channel support. So whatever I'm doing in the FX market on Wednesday, it will be confirmed by me anyway. That's what's important to me. It's going to be confirmed with gold. All right. So I want to say this. If you all really benefit from these week ahead videos, give me a thumbs up. Give my team a thumbs up. Subscribe to the channel so you don't miss any of these week ahead videos. We've been putting them together every weekend for about 8 years, maybe, on these week ahead videos. And for those of you that have known me longer than that, I've had them before then too, but with Forex analytics. So if you like them and you think they are beneficial to you, make sure you give us a thumbs up, and please jump in the comments. If there's something that I missed, or maybe, something that we should be watching in particular, jump in the comments, join the conversation. Anyway, I hope you have a great remainder of your weekend. My name is Blake Morrow, and thanks for listening in. I'll see you on Monday on the Free Face Show, so don't miss it. Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.